It has been more than half a year since the first trading of the Bitcoin ETF. Let's have a look at the long-term data. Let's see how much adoption there is. Let's see how much impact, how much long-term impact we can expect from the Bitcoin ETF on Bitcoin's price. We are going through multiple charts in this video. We are trying to find out what really happens long-term due to Bitcoin ETF influences. Let's start off with the asset under management dominance. So there are different types of ETFs. Initially, there was only the Grayscale Bitcoin Trust, which wasn't an ETF, it was a trust, which then got converted into an ETF. Now, the costs of the Grayscale Bitcoin Trust were pretty high, and the annual fees of all those newer ETFs are much lower. That's why investors tend to sell GBTC now, which is shown here in red, and tend to accumulate other ETFs instead. The two main ETFs on the market is IBIT and FBTC. Now this is a dominance chart, so this is normalized to 100%. Let's have a look at the same data, but this time measured in US dollars. So simply, what's the assets under management measured in USD across all those different ETFs? And we can see that this is pretty much flat since the 7th of March of this year. Now there is a bit of a problem with this chart because Bitcoin is very volatile. Bitcoin can rally and then crash again, and this has a direct impact on this AUM chart. So what we can do instead is to look at this measured in Bitcoin. So again, we're looking at the assets under management, but we don't look at it in US dollars. We look at this measured in Bitcoin. So when Bitcoin suddenly rallies 10% or it crashes 20%, it has zero impact on this chart. And here we can also see how this tends to flatten out somewhat, but there's definitely still an increase since the 7th of March. So on the 7th of March, we were at 808,000 Bitcoin. Now we are at 922,000. So over the span of roughly 5 months, we went up by 114,000 Bitcoin, or roughly 23,000 Bitcoin per month, which is equal to 273,000 per year. And that's relative to the currently circulating supply, roughly 1.4%. And so we can see initially with the adoption of the ETF, we saw positive inflows pretty much every day. So the horizontal line here marks neutral flows. So most days we saw inflows into the ETF. Bitcoin got scooped up by traditional finance. And then something happened around middle of March where we are now hovering much more around the zero line. So we don't see inflows every single day. Net, we are still going up slowly, again annualized by 1.4% roughly, but it's not that clear of a movement anymore. Now, one of my favorite statistics, one of my favorite metrics for Bitcoin is the realized price, because we can look at the chain, we can look at the transactions on chain, and we can see at what price did Bitcoin move the last time. Thus, we can find out what's the average cost basis of the market. Is the market currently in aggregate in losses or in profit? And whenever the market historically was in losses, that was a very good time to buy. So the realized price, the average cost basis, is in orange. It's, by the way, currently at 31,400. And yes, we can stay above for quite a while. This is when positive momentum takes over. But whenever we retrace, whenever we are in a bear market, the realized price is a very good metric to closely watch. So if we were to turn bearish, that bear market is likely going to stop somewhere around that level. And so we can dive a bit deeper, right? This is the realized price of the entire Bitcoin market, but we can also calculate the realized price of the Bitcoin ETF holders. And that's of course way higher because the ETF had been launched in January of this year. Currently, that cost basis is at around 59,000. And so maybe there will be more demand through the Bitcoin ETF whenever we fall below here, right? Because that's the fundamental idea. The idea is whenever you are in losses in Bitcoin, you can simply just wait it out. The sell pressure tends to diminish when there's no profit to take. People tend to wait simply for the next bull market whenever you are in losses with your Bitcoin position. This needs to go to 1 million, or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com, link is down below. Now here's a relevant question. How important is the Bitcoin ETF in the grand scheme of things? How much impact does the ETF actually have on the price as a whole? We can come at this from different angles. Let's start off with this matrix. On the x-axis, we've got the ETF flows. On the y-axis, we've got the Bitcoin performance. There tends to be somewhat of a correlation, as in when money flows into the ETF, Bitcoin tends to outperform on that day. Whenever there's net outflows, Bitcoin tends to not do that well. It's of course not one-to-one, as in there's not a perfect line here, but there seems to be somewhat of a connection. This result is actually somewhat surprising given that the ETF flows in the grand scheme of things aren't that large. Because check this out. This is Bitcoin's trading volume segregated by trading instrument. So we've got the futures market, we've got the spot market, and we've got the ETF market. The futures market is leading the trading volume. So that's what we see in bright orange. The spot volume is what we see in dark orange. And the ETF trading volume is what we see in blue. So really, the ETF flows are just a small fraction of all of trading volume. That being said, futures tend to be very short term. As in, this is speculative money. This is very often money that's just used for hedging. The spot market is a bit longer term. And so when we take away the futures market and we just compare the two, the ETF trading volume is maybe 1/3 of the spot volume now. Now the supply absorption by the ETF of 1.4% per annum doesn't sound like much, but we have to look at this in relation. For example, in relation to the Bitcoin inflation, which is currently at 0.85%, since we have just seen the Bitcoin halving. So we now see that more Bitcoin gets scooped up by the ETF than is being issued through the miners. So the liquid supply is net shrinking. And given that it's very unlikely that Bitcoin is going to get outlawed anytime soon, since we already have the ETF, since Bitcoin is now accepted globally, I believe calling it the hardest of the monies does make sense. There is a lot of volatility in the price, but still over the decades, it's probably very likely going to outperform fiat currencies like the US dollar, like the euro, like the yen. Now we have seen how the spot market is roughly 3 times the size of the ETF market now. And so the impact on the price, what's happening on the spot market is much larger. What we've got over here in orange is the realized cap change. So that shows what's happening on the spot market. This shows when long-term Bitcoin investors tend to realize their gains, tend to lock in their price. So we can see how the long-term holder supply change tends to be much, much larger compared to the ETF change. So when the long-term holders are selling, this has way more price impact compared to when traditional finance is buying in. And so that's why I like to look at metrics like the value days destroyed multiple. This shows simply when dormant Bitcoin suddenly move. And this tends to happen whenever we are very elevated in the price and when Bitcoin can't rally that much anymore. This metric recently turned red again just 2 days before the all-time high. It peaked at around 70k and currently we are slightly below that. Now, is it reasonable to assume that the Bitcoin ETFs are actually over the long term going to scoop up more than Bitcoin mining? Is the demand actually somewhat stable? I believe the answer is yes. Because check this out. This is the ETF flows in green and the Grayscale Bitcoin Trust outflows in red. And yes, both of this slowed down quite a bit, but the level of the Grayscale Bitcoin Trust outflows tends to be much lower now than the inflows from the traditional new ETFs. So it looks like we are going to see a net positive balance in the future. And that's why I think Bitcoin is still a very good savings vehicle. Many people avoid Bitcoin because of its volatility, right? Because it can drop 50, 60, 70%. But I believe this is actually a good thing. I believe this is an opportunity, because if we believe that Bitcoin will stay around for the next 5 or 10 years, and if we believe that the liquid supply is actually going to go down because the rate of mining is lower than the rate of accumulation, then buying a little bit every month, I believe, is the right thing to do. Because then volatility is our friend, right? Then whenever the price goes down, we get it for even cheaper. The only assumption we have to make is that Bitcoin will stay around, that Bitcoin will become more rare over time, and that the bear markets that are going to come simply are just temporary. If you enjoyed this video, feel free to give this a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. In case you've got Telegram, then you are more than welcome to join us. The link is down below. It's 100% free. Looking very much forward to chatting with you. Cheers.